All right. Hey guys, Sam back with you here on a Wednesday, June 6th. We're kind of midday. We've been trying some new things here. So we have pulled the Twitter followers to see what they wanted to have reviewed in video. So many of you follow on YouTube. I'd encourage you to follow on Twitter as well. I think it's proving to be a better platform for us to engage with you. And as today is an example, we polled looking for input as to what you wanted to review on and whether it would be in one of the alts or Bitcoin. And turns out the request was for Bitcoin. So I'm going to give an update here. We've been doing Bitcoin every other day last week or so. So a lot of Bitcoin videos here, but so when you shorten the time frame, there's always something to consider. So on the 15-minute here, I'm going to be doing the bull and the bear count. I've changed my count just a bit here, but just want to remind you to follow us on Twitter. Follow us on Twitter so that you can engage, and if you'd like to make requests about what coins we're going to review, that's a good way to do it. So hope you'll join us over there. It's Trade Devils. That's my Twitter handle. Trade Devils with an S. All right, that said, okay, let's look at the bearish or the bullish count here. So this is on Bitfinex. This is the 15-minute. Now, I made a few changes to the count here. So I can leave that on here. So I think you can see the rationale. So we had this yesterday when I was looking at this. We had kind of a question, was this a completed one? And then we want 1, 2, and kind of went back and forth on it. This is the count that I think works as we sit here now. So I've got this now completing here. So if you see it, so off of this low, I'm coming up as 3, 4, and 5 and completing over here, down for the 2. And then finishing with this diagonal here, very, very slight overlap. But yet there it is, which allows for the diagonal to finish here. So what I'm working from a low here to a 1, to a 2, to a 3, 4, and 5. So the next retracement now is from this swing low. Right, so we'd be taking from the white here, the white low. Well, so first you can see why I chose that. So here's the 2 at the 50 goes right to algo target. Right, so you can see that one. Now if we go all the way up, right, next pull takes us down to the 50. We get through it by a bit, but from that low, right, we've got an extension. Again, right, there's going to be multiple ways to count it. But what I see here is an A, B, and a very short C, because we can get 5 in that C. You'd have to go to the 5-minute to get it, but it's there. I mean, you can almost see it right here. If I zoom in on this, you can see this 1, 2, 3, 4, 5. We come down. So we have an extension, potentially, right? It's always just potential. Potential count here that works so we'd have an extended A wave, short little 3-wave B, then down in 5 for the C coming, so we're between the 50 and the 618, right, where you'd expect a wave 2. Now, take note of this median line. So I'm working from the new pivot swing here. So the fact that we tap it here, at that point you don't have this pivot, but it is kind of interesting to see how this is continue to play a role here and some influence in the market. So it feels as though potentially now with this tap here of the lower boundary that we've got some good framing of the market's geometry, at least at this point. So here's where bulls and bears are going to differ as to what's happening here. This is a tricky count over here off of this low, as has been the character of Bitcoin, at least in 2018. The 1s and 2s have been very, very tricky, and you won't know what the right count is until we move out of here, either substantially lower or substantially higher. So best we can do is try and find a count that works based on the new market information that we're given essentially with every bar. Where are we going? What's most likely? This is the reality of Elliott wave trading. You're constantly, not constantly, but very, very frequently, you're changing your count to accommodate what the market is revealing as it moves. So you got to be fluid with that, right? As I've said yesterday, you got to allow for the obvious pun. These waves are very fluid. God, it sounds retarded to say it that way. I shouldn't say that. It sounds stupid to say it that way. But there it is, right? These are fluid waves. They're changing all the time based on how the market's moving. So it's a constant process of trying to frame it, organize it, qualify it, quantify it, what could be happening, what can we eliminate. That's the value of this approach. Now, some people say, how can I trade something that can be changing every day? Well, okay, well, how can you trade anything then, if that's your criteria? Because the markets change every day. So you got to pick something and then stick with it. That's the big mistake that people make. They jump around. They try this. It didn't work for a while. Maybe I'll try something else. The real value comes from the discipline of getting comfortable with a methodology that you can see clear empirical evidence that it's consistently adds value to a technical approach to the market. So, my view is that it's very hard to dispute Elliott wave. Now, there are times when it's very hard to see, but there are other times where it's so blatantly obvious it would be really hard for someone to argue that it's not a reality in the marketplace. Now, can you work with it, manage it, trade with it successfully? Well, that's up to the individual trader and their skill and their ability to manage themselves, manage the risk, know when to be in, when to be out, right? It's trading is never easy. There is no easy way to do this, but there are proven methodologies that if you will maintain the discipline to continue to apply. I don't care if you get stopped out 4, 5, 6, 7, 8 times in a row. I have been stopped out 12 times in a row. A few years ago, but I've had that happen. So you have to be. The key to that is making sure that those losses are small. As I have said many times in video, I like to use the boxing analogy. You cannot enter the boxing ring and go and say, well, I'm going to pick up boxing, but I don't want to get hit. Right? It's just a silly thing to say. You can't get in the ring and come away without getting hit. Well, most of the time, right? So you got to be able to take a jab. And that's what all the little losers need to be. They cannot be knockout blows. And that comes from a lack of discipline with money management. It has nothing to do with your methodology. Right? I mean, you can be very black and white about the amount of risk that you're exposing yourself to on any given trade. Right? It's just a simple math formula. So again, not to get off on a rant here, but let's come back to the market here. So what's interesting here now, despite the complexity of this count, if we just take Elliott aside, right? Swing low, swing high. What do we get? We come to a 50. Now, so the fact that we get a reaction here should probably not be surprising. So from this swing low to this swing high, I've just done the exact same thing here. Right? Swing low, swing high. I can count a 5 out of this. What do? We come right to this technical confluence here. We have the lower parallel to this median line that seems to be framing the market fairly well so far. So what do we have here? We have a potential golden corner. Well, technically not. So this would be the corner pocket right here, right? So we don't have a golden. Hang on a second. So let me get this right for you. All right, so here's the corner pocket right here, which is as of yet unrealized, as we have not made the median line. That's close, but we haven't gotten there yet. So because the median lines give you a time element, we don't know, it may get here. Right? A lot of things have to happen. So this first algo target is here, not going to get, so if we get there here, we're not tapping the median line. So I look to that now off of this 50. That's what that algorithm that bought there is targeting. Now, how are we going to get there? So this is actually a good example to show you what I'm trying to teach you. The idea here is, right, so you could take all the Elliott off and just go, hey, well, there's a 50, and I'm buying the 50. Right, there's my target. Simple. What we're trying to do is use the Elliott wave, the subdivision of the swings between this 50 and this algo target, if it gets to that algo target. Or this one, we're getting to this target. We're trying to use that wave subdivision to our advantage so that we can enter the market with less risk. So here is a perfect opportunity to be buying. So if you are watching this now, I don't know where this will be by the time you watch it, but as I sit here looking at this, that's an absolutely textbook, got to take it, must buy trade right there. You got to take that trade. Look at the risk reward. If I put the stop on the 65, there's essentially 5 to 1. As I often will say, why would you not take that trade? Not enough upside? Well, what if we get the larger one? There's 8.6 to 1, right? I don't know. So let's tighten that up. So if you were there waiting for it, now, so assuming you front run, all right, what do we got there? That's 10.3 to 1. right? You're worried about the risk? Well, you shouldn't be trading. You got a bearish view? All right. So let's consider that, because we're going to look at the bearish count. But bullish or bearish, if you're applying this methodology and I get 5 waves coming out of a 50, I'm a buyer on the next retracement. I don't know why you wouldn't buy that. Just doesn't make sense to me. So if you're following my videos, that's a must take. And that doesn't mean it's going to be a winner. But if you're going to be consistent with the methodology, you take that trade. Simple. You don't have to put 5 Bitcoin into it, but you want to at least be there, because the risk is so low. Now, listen, trading that way, you're going to get stopped out far more often than you're not going to. This is the reality of it, right? Because you're so tight with the stop. And some people say, oh man, let's give it some room. Let's give it down to the big 65. Well, what'd you do to your risk reward? Now you're under 2 to 1. Right? That's why you don't do that. Not to mention, there's no reason to take that risk. No reason to do it. Right? The point of this kind of methodology is the precision. The precision. Your assumption is that 618 is going to hold. So putting a stop under, so why would you not put the stop there? Let me just phrase it that way. Oh, you think maybe it'll go to the 786? Oh, maybe. All right, well, you're still at 5 to 1 there. I wouldn't do it that way. I want the precision. I'll take it there. Now, for me personally, I'd rather get stopped out here and then look, if I like what I see at the 786, I'll re-enter the market. I'd rather take the jab rather than that might hurt. That might hurt a little bit. Again, it's a function of size, how much you're going to put on. Below the pivot, you want to go below the pivot? Well, then this count is invalidated. So it wouldn't make sense to do that, because you're trading this as a 1 wave. 2 wave, invalid. If you break this pivot, you invalidate. Not to mention, you've taken your risk reward to 2.65 to 1. My minimum is 3 to 1. If I can't get 3 to 1, I won't put capital at risk. Why? I don't, it's not that complicated. Right? Swing low, swing high, the 618. Again, why would you not take that trade? It's just sitting right there. All right, so we'll see. It'll be interesting to see where that is by the time I'll have people watching this hours from now. It'll be interesting to see if that holds. It almost doesn't matter if that's a winner or not. What matters is that you can identify it, recognize it, and pull the trigger. That's ultimately what matters, and have the consistency so that if you get stopped out, you don't go, oh, well, man, that 618 stuff, that's bullshit. That doesn't work. It's not a matter of whether it works or not. You can't dispute whether or not the market respects these levels. It's a question of, can you manage yourself? Can you manage your own emotion, your fear and your greed into that trade? And that's really secondary to what methodology you're using. Can you manage yourself? That's ultimately what it comes down to. Right? We will go further out of our way to avoid pain than we will to seek pleasure. Right? Here's what the guy looking to avoid pain does. Give it a little more room. I just want to be long. That's just, I promise you, the second you reach to move your stop, you're making the first mistake. And the market has a perverse way of punishing mistakes. Period. I've just lived it. I just promise you, don't make the mistake. Put your stop in, put it under the 65, next trade. It really doesn't matter what happens here. Only that you identified it, you maintained the risk control, and you pulled the trigger. That's what matters. And that you do it again and again and again and again. That's how you build discipline and confidence in this methodology. Not comfortable putting money at risk? Paper trade it. Do 20 paper trades like this and see what your result looks like. Now, I promise you, paper trading has its pros and its cons, but it lacks the emotional impact of having money at risk, right? People will go out of their way to avoid pain, so they don't want the stop. They don't want to get stopped out. I'd rather put the thing so close that I could get stopped out 3 times. I'll take 3 stops and be there for the 4th for the one that runs. Guys, you gotta... You got to be consistent, right? So if you say, I'm not sure about that one, right? Then the next time it sets up, what's your rationale then? Well, I don't know, the last one would have gotten stopped out, so maybe I'll skip this one. Same thing every time, every day, every market. Pick a time frame. Be consistent. Right? You want to be successful? You got to be consistent. All right, I'm ranting. I really didn't mean to do that. Okay, so off of this low, we can certainly see that we have the potential for 5 waves here. Now, that is an ugly fifth, no question. I mean, even if I go down to the 5-minute here, it ain't gorgeous. I mean, boy, can you get a 5 out of that? Well, boy, it's barely. That's an ugly 5. No doubt about it. So, maybe you make the case that because I'm unclear about, that the structure within that fifth, maybe I'll sit it out because I'm not confident about this. I suppose I can allow for that. But, if I go back to the 15-minute, and I would tell you to stay 15 minutes or above. That's not the best looking 5, but I can get 5 clear pivots out of it. So the fact that we come down here and we get a pivot, so the intersection of the lower parallel and the 618, that's enough for me. Right? I'll take that trade, but I'll be very tight on that stop, right under the 65. All right, if it stopped out, no big deal. Next trade. All right, so the idea being that if we're allowing for this to complete, so here's 1, so we get the extension in the 1, 2, 3, 4, and 5. So this completes a 1 wave, making this the 2. Well, I guess I should label this for you here. Let me do it that way. So let me get the blue one. So here, this would be 1. This would be 2. We're going up 3, 4, and 5. Let me get that degree. Let's take that, make that bigger. Let's go to minuet. Okay, so 1, 2, 1, 2. Right? Do you see what we're trying to do there? Well, we don't know, right? But the fact that I can get 5 here creates the potential, nothing more than the potential, for this to be playing as a 1, 2, part and parcel of what would be a much higher third. Right? So if you really start jacking this up in terms of where it could be going, this risk reward goes up substantially, right? So if that's going to be a 2, we know a reasonable target. We know the negative 100, right? That's a shorthand way to just check where the 1618 is going to be approximately. So if we're going to take that trade, that upside is actually there. Now it's 20.23 to 1. If that's going to go full, if this is going to go this way, so we're going to get 1, and this is the 2, and we're going to go 3, 4, and 5. We're going to go up there and get that. It's not unreasonable. Let's take this down a degree. All right, so one potentially now is in. Again, it's not the prettiest 5 I've ever seen, but there's a trade right there. Right, tradable. Stop under the 65. If stopped out, consider a reload at the 786. If it holds, and you get a reaction. It won't be the same reaction. It won't be the same kind of reaction because the algos will have flipped. But nonetheless, it would maintain an internal retracement, and we know, here's where the L8 can be helpful, we know a 2 can go as deep as the 786, and with Bitcoin, we've seen it deeper than that. We constantly are seeing these difficult second waves. So this will be interesting to see how that plays. Of course, I'd like to see that hold, right? I'm bullish. So for me, right, this is not a new trade for me because I'm already very long in Bitcoin. But for someone who were looking to get more position, get additional Bitcoin, that's not a bad place to look for it, considering that's your target. Right? And again, the time factor here, this could very easily all roll out to this time. All right, so something like that. So very low risk. There, if we catch that, that's 20 to 1. All right, I'll let you decide whether that's good enough. Let's go take a quick look at the bear count. So here's where it gets kind of interesting. So as I was saying yesterday in the bear count, this movement here, this action here from this pivot low, it's easier to see it as a 3. It really is, because from this A, B, then I can get 5 out of this, right? I just showed you how we get 5 into that C. So that potentially that's a C. So this looks like path of least resistance. And if in fact this does start to head down here towards this algo target, you can see here I've got it marked off as a potential C wave. Well, so then you'd be expecting something like this. So this would be 1, 2. We'd be looking for 3, 4, and 5, something like that to bring you down. Right? Well, this potentially now sets up as a 2. So let's consider that. If that's 1, well, 2 has gone to the 786, right? We know that's not uncommon for a 2 to go that high. So, but now you're looking at this. See, it doesn't play as well as a 2 because you have a 5 wave structure there. It's now we could have, duly noted, we could have something along these lines. This could be the A wave of a B wave going in that would take us up something like that. Or you might have a flat, depending on how deep this goes. There are a couple of different ways that this 5 could be incorporated into the bearish count. Right, we'll have to see now what kind of reaction we get here. So interestingly, as we sit here on this 618, in terms of what I've got visibly shown here, that happens to be right at the point of control. So the most trading volume happening right here, what are we at? 74, 94, approximately that range. So if this is going to play as 1, 2, you're going to need to see that 3 wave show itself here. So you're going to need to see something like this before we head down and do, get down to that kind of range. So let me pull that off. All right, so you see the idea here. If that's 5, can I get an A, a 3 wave B into a 5 wave C, and then am I ripping down here looking for this 3, 4, and 5? Right, potentially that's all there. So we'll have to see. So the tell will be if this 618 holds, that would be a very positive sign for the bulls. Right, that would keep that count alive as a 1, 2. Now, if we break, we still could, right? We still could hold the 618 and end up with a C. We still could. So you can't be definitive yet. You gotta commit to something, right? So if you just don't like the price action, you think there's one more leg down, then you're just, at this point, you can just sit tight, right? So you wouldn't be a seller here. You would need to wait for the next retracement, so you might be a seller there looking to get into the third. You'd have to be accommodating a truncated C to give you an ABC into that. Right here in the 15-minute, we're going to insist on seeing 3-wave subdivision before selling it. All right, so that remains to be seen what we get out of there. So this is at least a point where we can start leaning in more to one count over the other. Right? So if this holds over here, this adds validity to this as a 1, 2. If it breaks, well, then we're back into that lack of certainty. Not that there's a lot of certainty here, but this is a very certain spot to position yourself for a long. Right, stopped out or not, that's a reasonable place to look to get long. It's not a reasonable place to look to get short. I don't know. This would be, this would be tough to count as an ABC. Even in the, I suppose you could dig some sort of a very, very shallow C wave out of that to give you an ABC, but you'd be forcing the trade. You'd be forcing it. So we'll see if that holds. Again, I'm a long-term bull, right? Most people that follow me know that, but I'm not blind to the what clearly would appear that the path of least resistance does look like it's down, right? So how do we change that look? Well, that 618 holding would be a good start at it. And we'll have to see. All right, guys. So, that's a little bit longer than I meant to go. All right. So, just a reminder: give us a follow over on Twitter. I think you'll find we're going to be very active there. That'll be a good way to communicate with us and a good way for us to engage you, whether a member or not a member. If you're interested in our private membership Discord, you can come over to our website and read all about it. It's Trade Devils with an S, tradedevils.com. All right, guys, that'll wrap it for today.